What is up, guys? It is your boy Blessing back again with another banger. Nah, that's bad. That's a bad intro. Okay, guys, but I'm back again with another market updates, education, market education, markets class, whatever you want to call it, bro. But yeah, I'm back. Okay, so right here we have Euro USD. So as you can see, guys, um, on TradingView. I'm in my shorts. I can say that on TradingView, but on my MC5, I'm not on the shorts. So currently, I'm not in the shorts, but I was, um, but I got out due to some reasons that I'm not gonna go deep in them. So, but yeah, let's go, man. So, how did I take the shorts? So the market is bearish, as you can see, So after the market got bearish, it gave us what? Excuse me. It gave us a break of structure to the downside, and then after a break of structure, what do we expect? We expect a pullback. So in that pullback, on the road down, what do I mean by on the road down? So from this high to this low, we left liquidity highs. So this is a liquidity high which got taken out by this high. So right here we have a new liquidity high, which is this one, and this one, this one, this one, this one, and also this one. So all these bumps in the road, we call them liquidity highs. Okay, so we have to take one of those bumps out, and then we go down. We continue with our sale. Excuse me, trading view. I'm on Kokolile, so yeah. Okay, so we first pull back and then take out this liquidity, and then take out this one, and then finally take out the final liquidity, because there's no need for us to take out this high. There's no need for us to take out this high, because this high took out that high, so it already has liquidity itself, so it already has money, yeah. So we come up and take out this high. So but for you to be like, pay attention, you will see while we were pulling back up, the market was bullish, right? But let's push up, push down, push up, push down, push up, push down, the final push up, and then it pushed down to break the structure right here. So it gave us a change of character, and then after the change of character, we expect what? We expect a pullback inside the change of character. So as you can see right now, the market is inside that change of character, so we may expect another drop down. But let me just remove this because it's kind of distracting me. Yeah, but before we drop down, we need to take out liquidity, because always, guys, always the market has to take out liquidity. It can't just go, without liquidity, you know. So this is your liquidity. This is another liquidity high. So the market might just do this. This happens every time, guys. So as you can see, we have a push up, a push down, a push up, a push down. So we might expect another push up to take out this liquidity, and then push down again, giving us the change of character, or it may just push up again to take out all these liquidity highs, and then we can get the change of character, and then I could start looking for more shorts again to the downside. So it's simply as that. Why did I get out of the shorts? So as you guys saw, which my short was about right here, because I knew that after taking out that liquidity, we need to drop down. We have to drop down, So I'm also gonna tell you why I thought we need to drop down. So I got inside the shorts. So when the market pulled back here, I thought, wait, maybe it could just take out this liquidity high and then start dropping again. But I was wrong. Yes, I was wrong. And then it decided to give us a change of character. Why didn't I hold? Because it haven't, when the market was there, it haven't gave me like a change of character to like confirm my sales. It would say, okay, we are selling to the downside. So that's the reason why I got out. But again, at the end of the day, the market continued selling down, selling down, selling down. So right now, I'm just waiting for these liquidity lows to get taken out, and then the market might just push up again, because overall, on the daily or on the weekly, the market is bullish right here on the Euro USD. As you can see, we have a push up, a push down, a push up, a push down, a push up, a push down. So we might expect the next push up. So just as simple as that. So if I can just do a quick recap, Lana, I don't want to remove everything on my remove all the analysis, so I might get different charts for you, so that you guys can understand how do I trade and how do I use my smart money concepts. Yeah, I'm gonna add like FXCM. Yeah. Excuse me. Sorry. Yeah. I'm just gonna add a new chart for you guys so that you guys can see how do I analyze the market. So clearly, from the daily time frame, the market is bullish. As you can see, we have a push up, a push down, a push up, a push down, a push up, a push down, a push up, a push down. So you might expect the next push up, right? So I'm just gonna quickly do this. So, oh wait. I didn't write my confluences for you guys. I'm very sorry. I'm just new to this educating thingy, but I want to get my people to win, like every people. What am I saying, bro? Fuck my English. Excuse me for my language also, and yeah, English runs out sometimes, guys. Okay, so we have market structure. The first confluence is market structure. The second confluence, number 2, is supply and demand. Confluence number 3 is the PVD, the premium versus discount. Number 4 is liquidity. The market needs to take out liquidity, bro, every time. Number 5, we have the change of character. I'm just gonna write down chalk. Yeah, we have the change of character. So we have these 5 confluences in the market that we need to meet before any move. Yeah. So what do I have here on the daily? On the daily, excuse me, sorry. I didn't mean to do that. I wanted to take this tool. So right here, I have a breaker structure. As you can see, okay. I have a breaker structure. And right here, we have another breaker structure. So we may expect another breaker structure into the upside. So that's my current high, and this is my current low. So we are trading in between that high and this low. So what do we expect after a break of structure? After this break of structure, we expect the market to pull back. We expect the market to do a pullback, right? Okay. So I'm gonna try to be a little bit quicker so that I won't waste your time. We expect the market to do a pullback. And on the pullback, the market needs to take out liquidity before giving us maybe a change of character to prove that the market is ready to continue with its buy up. So we have what? These liquidity low. This is a liquidity low. This is a liquidity low, liquidity low, liquidity low. So we have all these liquidity lows that the market needs to take out before going back up again. So I'm just gonna mark the liquidity low that we need to take out right now, because all those liquidity lows that are above have been taken out already. As you can see, this one got taken out by this low. This one got taken out by this low also. This one got taken out by this low. Yeah. So it's something like that. So how do I know? Would see. Excuse me. The market is just bearish, guys. From this high. From this high, as you can see with the market, is just breaking structure. So now we may expect the next breaker structure, and then taking out this low again. If you engage, or if you understand me. Okay, I'm just gonna mark my lows so that you guys can get a clear view on What am I saying? What is this guy saying? Yeah. There's a liquidity low. That is a liquidity low. Also, this one is a liquidity low. So what do I have right here? I have a bullish market. On my supply and demand, my second confluence, the market is inside demand because a sell before the buy, guys, is a demand. It's clearly like this. A sell before the buy is a demand. So the market needs to pull back inside the demand and then continue buying up again. What is a supply? A supply is simply a buy before the sell. So the market needs to pull back inside that buy before the sell and then drop down again. So that's supply and that's demand. So it's something like that, guys. So as you can see, from that high to this low, the market sold down and then pushed up again. So all this area right here is a demand zone. So the market is inside demand, so it has to push up, or I don't know, or continue tanking down, giving us a change of character right here. So and you may be asking me, what is a change of character? Simply, a change of character is something like this. So we have, let's say we have a bullish market. So the market is just trading bullish like this, and then it decides to break one of these lows. If it breaks one of those lows, we expect a pullback inside that change of character and then drop down again. So that is a change of character. Change of character is right here by breaking this low. That's the change of character, guys. So yeah, I think you understand now. Okay, don't get me wrong. This is also a change of character right here, or a liquidity grab. We're gonna see once we take out this liquidity and decide what is the market doing, or what the market wants to do. Yeah. So I just want to drop to the 4-hour time frame. I'll drop to the 4-hour time frame, guys. Before I go and tell you how did I get that entry, I'm just gonna show you how does the market move using these 5 confluences. Simple. So confluence number 1, the market structure. What is the market doing? So the market is bearish because we have a push down, a push up, a little. Okay, I'm just gonna do it like this. We have a push down, a little push up, and then a push down, a little push up, a push down, a little push up. So expect the next push down. So the market is bearish. So I'm gonna mark my break of structures. This is a break of structure low. Which got broken out by this trend right here. So, and confluence number 2 is, guys, confluence number 2 is supply and demand. What do I have right here? I have my supply right here. And I told you a supply is what? A sell before, a buy before the sell, I mean. So that's my supply. Excuse me, I just need to, yeah. As you can see, with the market pullback and tapped really like a kiss inside that supply. Yeah, boy, a kiss. That was a nice kiss inside that supply. Yeah, boy. Aggressive traders could have entered for a sale right there and then watch the market chopping down. So I have my area of supply. I have my break of structure because the market is bearish. I know that the market is bearish. Number 2, I have my area of supply. Number 3, what do I need? A PVD. So what am I gonna do? I'm just simply gonna do this. I'm gonna take my Fibonacci retracement from that high. Let's just pick that high. From that high to this low. To this low right here. This low right here. And then I'm gonna extend it just for me to get like a better view here. So the market needs to pull back inside premium, the red area. You know, if the market is in the blue area, we expect buys. In the red area, we expect sales. So it's simple. Above the 0.5 fib, why am I saying it's the 0.5 fib? If you can check here, we have 0.5, and right here we have 0, and above the 0.5 obviously we have 1 above. So that's like half from 0 to 1. Half of 0 to 1, what is it? It's 0.5. So the market needs to pull back um, in the middle of that road down or the road up if the market is bullish. But now the market is bearish, so it needs to pull back inside the middle of the road down. So it has pulled back inside the middle. Let me just remove it because sesibonile ukuthi is a pullback here. So number 4, what do I need? Liquidity. Guys, I told you when the video started, ukuthi on the road down or on the road up, we need bumps in the road because the market can never just shoot up like crazy unless it's a certain event. Yeah, so the market is going to create bumps in the road. So right here we have one bump, which is our main liquidity because it's just one bump. So I need the market to just come up and take out this liquidity. So as you can see, it took out liquidity. So I'm gonna put like cash right here because I know you guys love to see this. Okay, so I'm putting this cash. So I've seen that the market is bearish. The market has supply. The market retraced inside PVD. The market has liquidity. So right now, why do I need a change of character? Where do I get my change of character? Now, pay attention, guys. Where do I get my change of character? So on that pullback, the market is clearly bullish. Doing this, and guys, this is so simple. Right here, it was consolidating, so I'm gonna need a clear, like, change of character. So where did I get my change of character? Right here. No, right here. Yeah, that's where I got my change of character to the market, and then pulled back inside the change of character, grabbing liquidity on the road down. Yo, what do I mean by on the road down? Look at this. From this high to this low, what do we have? We have a bump in the road. The market came back up again and took out that liquidity, and then start dropping, and then start dropping down. So let's say you are an like aggressive trader. You could have got a perfect entry right there, which you're placing your short right here on the what you call the thingy, and then targeting maybe this, yeah, this liquidity low right here. You could have got a perfect entry right there. You really could have got a perfect entry right there. Yep, like this. And then place your stop loss above the supply, and then target that's overall low. Why is it not triggered though? Oh, it's on the side. Excuse me. Yeah, just like that. Now guys, the market is so simple. If you're gonna trade like this every time, you are gonna win. So I want to continue analyzing. So let's say you didn't get that move. Now you want to enter for new sales, guys. Oh my god, the market is so simple. This strategy is so simple, bruh. So again, you have a bearish market after breaking this low. There's a break of structure, right? I'm not gonna write it down because I want to be like quicker. We have a break of structure. So confluence number 1, we have a break of structure. Confluence number 2, supply and demand. The market is clearly in supply, guys. The market is clearly in supply. What is supply? I told you it's the buy up before the sell down. So this whole area is your area of supply. So as you can see, we are inside supply. So I'm just gonna remove it because we already know we are inside supply. So from this high to this low, we have bumps in the road, plenty of bumps in the road. So I'm just gonna mark my bumps in the road so that I could see what's happening. So as you can see, this one got taken out by this one. So yeah, that is also liquidity, and this one is also liquidity. Just gonna spread it because it hasn't been taken out. Let me just write there. Let me just mark the major ones. Yeah. And this one is also liquidity. And this one is also liquidity. Because it's a bump in the road, guys. It's a bump, right? And this one is also liquidity. So the market came back up because after a break of structure, guys, we expect a pullback, right? And the market needs to pull back inside the PVD, you know. That's my confluence number 3. So I take my PVD. I mark my PVD. As you can see, the market is inside the premium. You see? I mean, yeah, it's inside the premium. So as you can see, the red part is the premium. The blue part is the discount. So on the blue part, as you can see, the market pushed up. As I said earlier, that the market, if it is inside the blue area, it needs to push up. And then if it is inside the red area, it needs to push down. So we expecting sales. So as you can see, the market pushed up inside my PVD above my 0.5 Fibonacci retracement and took up this final liquidity because it doesn't need to go back up and take out this liquidity because this high took out this high. So can you see that? Yes, it's so clear and beautiful. And guys, look at this. After taking out this high, I could drop. So I knew that now the market retraced inside PVD and then took out liquidity. So right now, what do I need? I need a change of currency. So I drop to my 1 hour time frame. I drop to my 1 hour time frame and look at what the 1 hour is doing. Where's my pad? Where's my pad? Right here. So look at what the 1 hour is doing. The market, the 1 hour is bullish, right? Look at this. I just want to show you how did I got those sales, and then why did I get out? That was our change of character, and then a pullback is at the change of character, and then now the market is just tanking down, guys, tanking down. Oh my god! So right here, this was our change of character low, just as simple as that, because this was our last break of structure to the upside. Yes, so surrender. This was our last break of structure to the upside because the market was trading bullish, 1 hourly bullish. So yeah, I don't need to just say everything because guys, you can see, man, you can see. So I had a 4 hour change of character low that I need to take out before I enter for my sales but I was too, you know, I was craving for this sales. So this was my change of character low on the 4 hour time frame, which got hit, and then the market, look at this, beautifully retraced inside this area of supply here. This is a buy up before the sell down, right? Excuse me. And then the market uh, pushed up and then tapped inside there, and then from there, guys, it was just tanking down, tanking down, tanking down, tanking down. So guys, I got in for my sales right here on this change of character low. That's where I got in for my sales, but I got out maybe about here. So yeah, I made some money. I made some money. Then I put my stop loss above here. So I made like 1 to 1.5 risk to reward. But if I were to hold, I could have gotten like a, this is like a 1 to 5 risk to reward. Yeah, this is like a 1 to 5. So a patient trader is right here with his shorts, with his stop loss above the supply, or just enter exactly at the supply and then put your stop loss about a little above the supply, and then targets this overall liquidity low right here that we need to take out in the near future, this liquidity low, as you can see. So guys, this is so Simple, guys. I swear to God, this is so simple. Again, so right now you want, let's say you want to enter again, like currently you want to enter inside the market, okay? So what do you have? You have a change of character to the downside. So you prove that the market, it proves that the market is, yes, yes, yes. You need to choose Jesus, guys. Edit Sunday. That was not a coincidence. I think that was Jesus like telling me to, like, yeah, to send you a message that you need to choose him every time. You need to choose Jesus every time, guys. Okay, whatever, man. Okay, so right here. Oh, sorry for that, guys. Sorry for that. So we have a change of character to the downside. So it's proving that the market is bearish. Confluence number one. What is the market structure doing? The market is bearish after changing character. Confluence number two. I need supply. I need supply. Oh, guys. This happens every time. This happens every time. This is my supply because it's a buy. Whoa, bro. Chill, brother. Okay, yeah. This is my supply because the market pushed up and then sold down. So this is my supply. As you can see, the market is inside the supply. So, yes. Okay, sorry about that. Okay, yeah. So the market is inside supply. My God, guys. And then what do I need? Confluence number three, my PVD. I take my PVD. Excuse me. Sorry for that. I take my PVD, my Fibonacci retracement from the highest high to the lowest low, and then I spread my Fibonacci retracement. So as you can see, the market hasn't retraced inside the PVD, but overall it is inside supply. So maybe we should sell, but no. Wait. One more confluence. What do I need? I need liquidity. Oh my God, we're gonna enter for sales. Ooh. See, this is my liquidity high because it's a bump in the road, guys. This is so easy. This is so easy, guys. It's so repetitive. Is it is it repetitive or repetitive? What? Whatever you want to call it, bro. But it repeats every time. So as you can see, guys, these are my liquidity highs. Liquidity highs. Oh my God. Liquidity highs. I'm about to end the video now. Liquidity highs. So the market needs to take out liquidity and then give us a change of character, guys. Simple. So see, from this pullback, the market is clearly 4-hourly bullish. You see, going up, then breaking this high, going down again, breaking this high, going down again. So it needs to break out this high, maybe take out liquidity, and then give us a change of character by breaking this low, and then pull back up to the change of character, and then continue with our sales. Or maybe the market can just continue to push up, maybe take out this liquidity, and then push down again, retrace inside this area of demand that we will create before. This is a buy before the, excuse me, this is a sell before the buy, so it's a new demand, right? So maybe it can come back down and then tap inside the demand and then take out the final liquidity and then give us like a change of character, and then we could enter for our sales again. And overall, we kind of have like a trend for you trendline traders who trade the trend line. I do not trade the trend line, guys. I do not trade the trend line. So as you can see right here, we have a trend line. So we're expecting the dead touch on the high. So we're expecting like a dead touch. See? So this is our trend line. But guys, don't get me wrong, I do not use trend lines. So yeah, guys, we are entering for sales next week again. Why do I want to sell? Because the dollar is bullish, guys. The dollar is bullish. And as you can see, the dollar is bullish. It's almost like the same analysis I have for EURUSD, but on the opposite way. So as you can see right here, we have a change of character. So the market is pulling back. It needs to take out liquidity. We have liquidity over here. We have another liquidity low right here. Oh gosh, this is so beautiful. The market needs to take out liquidity before pushing back up. The dollar needs to take out liquidity before pushing back up. The EURUSD needs to take out liquidity before pushing down lower. So it's as simple as that, guys. The market needs to just needs to you see, put right here. From this high, the market is bearish, as you can see. It just broke structure right here. So we may expect another pullback and then another drop, a pullback and then another drop. Maybe take out this liquidity and then give it a change of character, or could also come back down to take out this liquidity. And look at this. Underneath this liquidity, we have like this area of supply, this sell before the buy, this demand, the demand area, I mean, and then come back up and then finally giving us a change of character to the upside, and then we could continue for our buys on the dollar. That is just how I trade. Yeah, thank you for watching, and I don't know, I'm not gonna say leave a like, but leave a like, guys, come on. If this was like how am I gonna put it, like, yeah, useful to you. Yeah, thank you for watching. Goodbye.